2 years of that policyholder, and from PSA, which is actually the pool created by the policyholder through contribution, an amount will be given as support, and that amount is equivalent to value of installments yet to be paid by the policyholder till the maturity of the policy. So to explain this, I have given some numerical example that payment of claim, that how this works. Should the participant die and suffer permanent and total disability in the 5th year of participation, Takaful benefits will be paid in the following manner. For understanding purpose, it is assumed here that participant is paying 1000 Malaysian ringgit as contribution, and out of that 978 is credited into his investment account, and 22 is going as donation in Takaful pool. So if he dies after in 5th year, so he has already contributed 5 installments. So 978 times 5 is equal to 4,890. Profit, if any. So after investing this money for 5 years, let's say 400 Malaysian get the profit. And from participants' special account, because still 5 installments to be paid, so an amount equivalent to 5 installment, which is 5,000 Malaysian ringgit, will be given as support from this fund. Total Takaful benefits payable are 10,290. But in other case, when participants survive for whole the period of the policy, then how much benefit he will receive. So he has paid all 10 installments, so total money deposited in his participant's account is 9,780. Profit from investment is around 1,800. From participants' special account, nothing will be provided here, and total Takaful benefits will be 11,580, and plus any surplus if determined by Sharika Takaful. So this is how compensation will be given to the policyholder or his heirs. In case of general Takaful, what we can see that all contribution by the policyholder is received as donation. There is no investment component in it, because general Takaful is mostly short-term policies and it is difficult to manage some useful investment of that fund. So here we only have donation received from the participants. The nature of contract between company and participant is still based on Muzarba. Then Takaful contribution paid by participant, this goes into general Takaful fund. Then company manages investment of this fund and generates some profit. That profit comes back to general Takaful fund. Then operational cost of Takaful is subtracted first. This operational cost of Takaful includes mainly the compensation paid to some of the policyholders facing a specific loss, and also the re-Takaful cost and business expenses related to Takaful. After subtracting these costs, remaining amount in this general Takaful fund is considered as surplus, and that surplus is shared between the policyholders and the company. Here ratio is assumed to be 40% and 60%. The amount of profit which is accrued to the company, first company will subtract administrative and management expenses, and remaining will be the profit distributable to the shareholders. And the amount of this surplus going to the participants, first company can use some of this money to create any reserves, and then remaining they can share with the participants. So this is the Muzaraba model in case of family takaful and general takaful. There are certain concerns scholars have shown regarding this Muzaraba model. The important concern is that the type of the contract which is used in this model is based on Muzaraba, which is a commercial contract, and percentage of surplus as performance incentive. Scholars have shown this concern and raised this objection that company is already receiving wakala fee for performing some specific activities. So there is no reason for charging a separate benefit from surplus in the name of performance contribution of performance bonus. Second thing is that here again company promises to provide Qarz-e-Hasan from shareholder fund if fund available in General Takaful Fund is not sufficient to provide compensation to all the participants. So again it is said that Vakil cannot be guarantor, and taking this responsibility is not correct on the part of the Takaful company. So in this Wakala model also one more thing was that because profits are being shared between General Takaful company and the policy holders, and ultimately these are going to be shared by the policy holder. So still some commercial nature of the business is existing, and because there is involvement of gharar, so therefore it was thought that no direct contractual relationship should be found between company and the participants. So on the basis of this concept, new model was looked for, and this new model came as Waqf model. This is newly developed model and introduced in Pakistan only 3-4 years back, and all the Takaful companies in Pakistan are running their business on the basis of Waqf and Wakala model, and some other companies, as I know, one company in South Africa is also working according to this Waqf model. So first I would like to introduce the concept of Waqf. Waqf is an Arabic word and it means to stop, to withhold and not to let go. In technical meaning, Waqf means to allocate or donate some property or cash for a specific purpose to get pleasure of Allah and not to let it go through consumption or sale. The Waqf property comes into ownership of Allah subhanahu wa ta'ala, and Waqif has no property rights on it. But Waqif has right to set the rules for Waqf and manage the Waqf. Waqf may be general purpose or a specific purpose. Mostly Waqf is general purpose. If created, everyone is allowed to benefit from Waqf. But we find examples where a specific purpose Waqf can also be created, and examples from fiqh we find like Waqf al-Awlad or Waqf al-Aqarib. In Islamic law, Waqf is a legal entity, and this was the reason for selecting Waqf to be introduced in this Wakala model. Reason is that because Waqf is a legal entity and Waqf has capacity to enter into contracts. So here Waqf is introduced in the model so that participants can have contract with the Waqf, and then Waqf can have a separate contract from the Takaful company to avoid any direct contractual relationship between participants and the Takaful company. So the working mechanism of this Waqf model is first initial donation by shareholders to create Waqf fund. So shareholders of the Takaful company donate some reasonable amount of money to create a Waqf. In Pakistan, this Waqf is created by 5 lakh rupees. Then after the creation of this Waqf, participants pay donation to this Waqf fund, and Waqf fund arrange Wakala contract with Takaful company to manage all Takaful related activities. Whatever donation paid by the participant, 25 to 35% of that is given to Takaful company as Wakala fee. Remaining amount is added into Waqf fund. Then company manages investment of these funds on the basis of Muzarba. Whatever profit is generated, that profit is shared between the company and the Waqf fund according to agreed upon proportion. Then operational cost of the Takaful business is subtracted, and remaining is surplus, and this surplus belongs to the participants. On the other side, or for the company, there are two sources of income, and company first subtracts the management expenses, and remaining is profit distributable to among the shareholders. So we can see that this Waqf model is almost same as Wakala model, with the only difference that Waqf institution has been introduced between the participants and the company. So in this model, all those objections which were raised against previous two models were tried to taken care, and in this model, because donation is given on a unilateral basis as donation, and there is no contractual arrangement to receive compensation from the company, but compensation becomes due only if someone qualifies on the basis of the rules set for the Waqf. So it is not a contractual relationship between payment and receiving compensation, that I am providing this donation with the condition that I will receive compensation in case of occurrence of loss. Donation is given unilaterally, and compensation will become due automatically if someone will qualify to receive compensation according to rules defined for the Waqf. From management point of view, also we find that because this Waqf fund is not owned by neither participants nor by the company, Waqf belongs to Allah subhanahu wa ta'ala. In case of failure of the company, this Waqf fund is to be distributed as charity. So also company will find no reason to deny payment of compensation on the basis of any excuses, because this fund don't belong to the company. So these are three models which are operative as Takaful models in different parts of the world. Muzarba model is mainly operational in Malaysia and in Southeast Asia. Wakala model is under operation in Gulf countries, and Waqf model started in Pakistan, and still its application is limited. What is the main difference between the conventional insurance and Takaful models. One, we can see that in case of conventional insurance, arrangement is about transfer of risk, that participants transfer, policyholders transfer their risk on insurance company against premium. Whereas in Takaful, there is no concept of transfer of risk, but there is concept of sharing of risk, that participants share the risk among themselves. Insurance company is not responsible for providing compensation, but compensation is provided by the fund collectively provided by the participants.